Hope I'm audible. Hope I'm audible. I welcome you all to this Saturday morning, a session on 9 and 9C, which will be helping you for next 1.5 months in your journey of filing the annual returns and helping all the clients. I have only three things to share today: what we do, programs, and the opportunity for you guys as members. What we do, first thing is we have come out with the annual action calendar from KSCA. This is first time in the history of KSCA that the committee is coming up with their full annual action plan. Make use of this and register for the important programs which you feel you want to attend, like prior hand. Second, there are two main programs which I want to make you aware. One is if you are serious about expertising in indirect taxes, there is a GST RRC, which is a residential course, which has been planned in the first week of Feb. Please do register for it. The second is in the month end, like around November 28, 29, there's a physical program which we are conducting in Bangalore. If you're interested, please do register for that. And opportunity for you guys as members is if you if you want us to conduct session on any particular topic in the annual action calendar, there's a link called suggest a topic. You can click in there. We'll try to come up with a session on that topic. Second opportunity for you is if you want to be a speaker or writer, please reach out to us. We will help you recognize your talent and help you showcase it within our fellow members. Third is in your city, we are trying to reach out. If you're interested, please reach out to us and we can conduct a joint program in your city in the brand name of KSC. With this, I would like to hand over the session to Sachin, who will be moderator, who will be introducing our Hunny and Ashika Agarwal, who will be our guide in this session. Yes, over to you, Sachin.
Yeah, good morning, everyone. Thank you, Rahul. Yes, I'm very pleased to welcome our speaker for today, CA Hunny Munjal and CA Ashika Agarwal for the very impactful session on GSTR 9 and 9C. CA Hunny Munjal is a chartered accountant having around 8 years of experience in GST and focusing mainly on indirect taxation. He has worked with KPMG, PwC, and RSM. He's having 6 years of experience in consultation with primary focus on real estate sector, oil and refinery, ITES, entertainment, and alcohol beverages. Welcome, Hunny.
Thank you, Sachin, for your wonderful words. And good morning, all. On a Saturday morning, on a weekend day, we have came up with a very good session on GSTR 9. And why this is important? Because as you all know, GSTR 9 and 9C, the due date is 31st December, which is close to 1.5 months still lying up. So we should gear up, we should sharpen our axis, and we should understand the nuances of GSTR 9 and 9C. Probably I'll start with GSTR 9, and my fellow Miss Ashika Agarwal will take up the 9C. So first 1.5 hour will understand the nuances of GSTR 9, and post there too will understand GSTR 9C. I hope you're all excited to understand the nuances of GSTR 9 and 9C, so that we can be a very good chartered accountant and we can fill our all our compliances in a timely and an effective manner. So my first slide, all throughout this 7 years of journey of GST, we have seen number of notices being issued by GST department from all sides of directions. Probably you would have seen, I have mentioned just couple of instances which touch upon annual turn, which is GSTR 9. But there are other examples also which department has issued. Probably we will cover up in the subsequent sessions. But as of today, we have a number of notices which are in context of annual turn. The examples are the difference between GSTR 9 versus GSTR 3B. So outward details which are being written or reflected in GSTR 9 vis-a-vis GSTR 3B. Is any differences there? For sure, department would issue a notice for that matter. Second, there is a outward as per GSTR 1. And if there is any difference between GSTR 9, then for sure there'll be a notice coming up to your doorsteps. So we should be mindful of that. Third one, there is a very, I will say, very important topic, which is GSTR 2A versus GSTR 2A or 2B, vis-a-vis what has been reflected in GSTR 9 as ITC claim. This is a very hot topic, which has always been picked up by the department. The fourth one, tax payable as per GSTR 9 and what has actually been discharged. So there could be a difference of that. We will dwell more into this aspect in the subsequent slide. How can be a difference between tax payable in GSTR 9 vis-a-vis actually being paid in GSTR 3B? Is there possibility to have difference between them? If so, how we can rectify that? Probably we will dwell more in this aspect. The next point, HSN summary. Just to give you a little insights to GSTR 9 form, it says you have to reflect all your outward HSN wise summary in a table. And in the same form, there is outward taxable supplies. So generally, in a normal parlance, there shouldn't be any difference between HSN summary, which you are reflecting in GSTR 9, vis-a-vis your outward sales. It should be tying up. If it's not tying up, then for sure, one more notice would come to your doorsteps. The last one, which is now currently being taken up, the tax paid under RCM basis vis-a-vis RCM ITC claimed by the taxpayer. If any difference is there, what that means is if you have discharged GST under RCM on any transaction as a recipient and you have claimed ITC on RCM basis, if in a normal parlance, there shouldn't be any difference. A 1 month gap is okay, but on an overall 1 year basis, it should be matching up. So these are the type of notices which generally we have seen in the context of GSTR 9. Now, probably I've just taken you a very small list of the notices which department have issued, but there could be multiple instances. There are hundreds of notices being issued by the GST department in the context of 9 and 9C. And this is just a gist of that. And after seeing all these notices, generally as a taxpayer, we have these kind of expressions. Like, kya chal raha hai? What is this going on? How we can do this? So probably just to not have this expression, we'll understand more of GSTR 9 and 9C, so that at least if any notice comes to us, we'll be in a position to answer it in a very proper manner, handle it, and if required, at least sit with the officer, tell him, okay, these are the basic data points on which basis I have prepared my annual returns, and these are correct. And I have these breakup of that. What breakup do you have? We'll dwell more on this. So just to tell you, what is annual return, which we call GSTR 9, and which is one more is annual audit, GST audit, which is GSTR 9C, reconciliation statement. This is your last opportunity to correct all your mistakes, if any, has been made in during the year. Let's say for financial year 23-24, if any by mistake you have done mistakes in GSTR 1 or 3B, or inadvertently it's been done without your actual thought, then annual return, which is your 31st December, is your option or your time to correct all your mistakes. If you do it in a right manner, at least you'll be safe from any interest and penalty later on issued by the officer. Just to tell you more, section 73 of CGST Act, it says voluntarily, if you are coming forward, you can discharge the GST amount along with interest and all your proceedings would be closed under 73(5). At least that opportunity is being given by the GST law to all the taxpayer by way of GST annual return, which is GSTR 9. So That is the reason it is most important to be very cognizant of the part what numbers we are reflecting in GSTR 9. I'll take you to the factors which is to be taken into account while reporting data in annual return. First, tax paid under GSTR 3B. So just to tell you, all your taxes in a normal parlance, you pay in GSTR 3B. And GSTR 1, which is a monthly outward details, are just only for reflecting all your outward line by line details. So all your taxes are being paid through GSTR 3B and all your outward supplies are reported through GSTR 1. Annual returns. So as we were saying, this is your last opportunity. So GSTR 9 get auto-populated by basis your GSTR 1 table, GSTR details which you have input in the tables of GSTR 1. So all your annual return have the similar tables like GSTR 1. It will not have much difference tables. Similarly, like your monthly GSTR 1, you have the same tables in GSTR 9, which you have to fill in. Just to tell you more, annual return is just a consolidation of your monthly GSTR 1 and 3B. It's not a different return per se. It's a consolidation of all your monthly returns, which on a monthly basis on 11th or 20th you file, you have to consolidate all their details and fill in annual return. So just to make a consolidation, the tables had to be alike of that. They had to be akin of the same parameters which GSTR 1 was there. So that's the second most important factor which everybody has to take into account. The third one, tax paid cannot be changed. So we will for sure dwell more into this third point, which says tax paid cannot be changed and tax payable can be changed. But just to give a very small hint of the thing, so as in the first point we were discussing, generally on a normal parlance, we pay tax by GSTR 3B. So whatsoever tax we have monthly basis, we have paid it, will remain same. If any transaction which you believe that was inadvertently been left out or mistakenly been left, so that you can discharge in GSTR 9 by way of DRC 03. So there are two medium by way which you can discharge the tax payment. One being a GSTR 3B, the second being DRC 03. So in your GSTR 9, the tax paid column would remain auto-populated and you cannot change it. But tax payable column, you can still change it basis your taxable value. And the remaining difference, you can discharge it. Tax payable is calculated on taxable value. For sure, this point would be dwell more into when we were discussing clause by clause GSTR 9, which clause says taxable value, which clause says which point. I'm taking it a little slow so that everybody can understand and can go with my flow as well. So how to approach your outward supply? That's a very important slide which everybody had to understand. First, how much tax was actually being payable as per your books? In your books, how much actual tax on your outward supplies is payable? Second one, how much has been reported in your monthly returns? 1, 2, 1, 3B. And then matching of the both. Whether all the returns 1 and 3B along with your books accounts are matching or not. And if there is any difference per se, let's say X amount, there is a difference, the reasons for that matter. What is the reason of having a difference between your books and your monthly returns? In a normal circumstances, we should not have any difference between any of these three. GSTR 1 should be same as GSTR 3B. Book should also be same. But if any difference is there, we should match all these three. We should prepare a reconciliation. We should understand why there is a difference between three. If any difference is there, we should have a reasons for that matter. Because GSTR 9, as I've mentioned, you gives an opportunity to correct your mistakes or your leftover things. If you are forget to report it, please do report in your GSTR 9 at least. So this slide is simple to understand the tax amount and reporting of that. I'll take you the basics of GSTR 9. We have understood the how to report it, what are the basic factors. Now, when is GSTR 9 required to be filed? What is the threshold and what is the due date? In this slide, we will understand this. As a taxpayer, if your turnover exceed rupee 2 crore in a financial year, you are required to file a GSTR 9. But who's taxpayer? A regular taxpayer. What that means? If you are not a composition taxpayer, if you are not a entity who are registered only for the purpose of TDS or TCS, they have a separate annual returns. But for a normal regular taxpayer, if your aggregate turnover exceeds rupees 2 crore in a financial year, you are required to file a GSTR 9 in that state. And aggregate turnover, just to mention, is defined under the GST law, which says all your supplies which can be exempted, which is your taxable, which is your exempted, non-GST, everything would fall part of aggregate turnover. It's been specifically defined under the CGST Act. So all your aggregate turnover, if it exceeds 2 crore, we have to file a GSTR 9. And turnover had to be seen from PAN basis. Let's taking an example here. Let's say Mr. X is dealing with, let's say, laptops, and he has 3 units, one in Karnataka, one in Telangana, one in Andhra. Now, in a total PAN level basis, the turnover is more than 2 crore. But in the state of Telangana, he has just started and his turnover is very less, probably not even 10 lakh rupees. But on a PAN level basis, Mr. X aggregate turnover exceeds rupees 2 crore. Whether he'll be required to file GSTR 9 only in the state of Karnataka and Andhra or Telangana as well, even if the turnover is less than 2 crore? The answer would be yes. In all the 3 states, he'll be required to file GSTR 9 because aggregate turnover is being computed on a PAN level basis. We don't have to see on the state only. It'll be PAN level basis. If your aggregate turnover exceeds 2 crore on a PAN, then all the states are required to file GSTR 9. So next point, due date. I think I've mentioned it multiple times. For financial year 23-24, 31st December is the due date. And in a normal sense also, 31st December of the following year is the due date for filing the GSTR 9. And in case you delay that, there's a late fee provisions, which is 5 crore, 50 rupees, up to 5 crore, it's 50 rupees. There's a slab rate, up to 5 crore, 50 rupees, 5 to 20, 100 rupees per day, which is CGST, SGST, I'm totaling both. So there is a late fee provision under the GST law for delay in GSTR 9. But it's good always to file in a timely manner and with the correct numbers, so that our objective, which is to give a correct picture, correct are all mistakes, and in a proper within a time frame, we have to file a GSTR 9. I'll take you to the next slide. So this slide also covers some nuances of GSTR 9. Now we are already 7 years of GST. GST portal bases are GSTR 1 and 3B. To the extent which he can generate it, it auto-populates the GSTR 9. What that means is, just bases your monthly GSTR 1 and 3B. There is already a auto-filled GSTR 9 being generated by the GST portal. So you have to check that. And these are all, I can say, major fields are editable. There are some fields which you cannot edit it, but on a generic basis, if I say major fields are editable, so you can change it. So now you have four things, one being your books of account, one being your GSTR 1, one being your GSTR 3B. Now one more help the government is doing to you, which is auto-populated GSTR 9. All four, you just compare every bit, all. Any difference per se, you identify that, or whether all of them are aligning with each other. If not, then probably you can reflect that. Let's say, taking example, your outward return in GSTR 1 is X, but in GSTR 3B is X minus 1. Somehow you forget to report a outward supply in GSTR 3B. So now in GSTR 9, at least you can report that outward supply in your GSTR 9 and correct your mistakes by additional paying the GST amount for sure. So now the first point very clearly says your GSTR now is also auto-populated by the GST portal. And that can be a ready reusage for you to match all these. The next point, as we were mentioning, GSTR 1 and 3B is auto-populated. One more important, ITC, all your table 8A, your 2B is also being auto-populated by the system. And this is not an editable field. You cannot edit it, but you will have the breakup of the table 8A in GSTR 9. I'll take a moment here to just give you more insight. So as per section 16, now if we are eligible for ITC, we had to first have an invoice, we have to have a service, we have to make the payment. Additionally, from 2022 onwards, we have to match that purchase invoice with my GSTR 2B on a monthly basis, and then only I'm eligible to claim it. Same thing is here. In GSTR 9 also, there is an auto-populated 2B figure. Now it's not 2A, it's 2B. 2B is being auto-populated in table 8A, and there is an Excel sheet also. You have to download it. You have to match with your ITC ledger, and then basis there to a table 8A, you have to fill it. We'll go in table 8A. What is table 8A? How to fill it? But yeah, on a prelim basis, I can say now you have to match that also. All your ITC has to be matched up. The last one, in case any additional liability you have, what I was mentioning earlier, let's say during the year, you forget to mention a outward supply, a one sales invoice which you forget to report in your GSTR 3B, but it was reported in one. Then now you can report that and you can pay that additional liability by way of DRC 03. So that was a little bit insights to what are being nuances of GSTR now. Before filing GSTR 9, we should have some documents. Now, section 35 and rule 56 of the CGST rules says you have to maintain these documents, and then probably, yeah, for sure, you can go ahead with GSTR 9. What are these documents and how will they help you for filing the annual returns? Outward supply of goods and services or both. So that's a very important document. You should have a detail of your outward supply of your goods and services which you have done during the year on a line level basis. It should not be a consolidated. In your books of accounts, there should be a very clear details with respect to supply of goods or services, or if you are doing both the things, so that in case you want to match everything, which I was always mentioning, you have to match your books with your GSTR 1 versus 3B versus your auto populated. For that matching, you should have a clear details of your supply, and that acts as a principal document. It should have an invoice number, it should have a taxable value, it should have a vendor customer name, the place of supply, the location of that. Everything would fall back on your outward supply of goods and services. What is the details of that? So this is a very important and the primary document. The second document, stock register for inputs and capital goods. So just to mention here, in the GST law, stock register is not a very clearly being given, but in the erstwhile law, in the excise law, there was a specific register for all your inputs, all your production. But in a GST law, we should have a stock register maintained for inputs. Input means your raw material, your consumables, your anything which you are dealing with. If you are in a trading business, you should have a stock register for your goods which you are dealing. If you are in a production, you should have a stock register for your raw material, consumables, what production you have done. So everything should be with you handy, because all your input ITC claim will come on this. Because section 16 says when you have actually received the good, and how would you justify that? By basis of GRN. And then there'll be a stock register which says, okay, on this date I have received these goods, and on these dates I have sold these goods. So there should be a clear stock register maintained for inputs and capital goods. And capital goods, for sure, if you sell that, there'll be a GST implication. On inputs also there will be a GST implication. So that's the reason you should have a very clear stock register. The next point, ITC availed, reversed and reclaimed. So this point says you should have a ITC ledger, or I can say purchase ledger, which clearly says how much you have availed it, how much you have reversed it, and how much you have reclaimed it. So I understand, okay, ITC availed. I'm eligible as per section 16. I've received the goods, I have invoices. My 2B is my purchase register is matching with 2B. So I have claimed ITC availed. But what do you mean by reversed? When should I reverse it? Is there any condition for reversal? Yes. In GST law, there is a specific rules. There is section 17 also, which says you have to reverse it. I'll take one of example, rule 37. So section 16.4 says, or I can say section 16.4 says, if any ITC you have claimed it, you have to make a payment within 180 days to the supplier of the service or goods. And in case you does not make the payment within 180 days, you have to reverse that ITC along with interest, which is rule 37. So in that case, you have to reverse your ITC availed. And then the rule also says, if you have made the payment to the supplier, you can reclaim it. So the third word, which is reclaim, you can do a reclaim also. So I believe this point is clear. The next one, output tax payable and actual paid. So this is linked to upward, first point. Outward, how much is payable and how much is actually being paid by the taxpayer. They had to be same, if not paid by GSTR 9. That's the best scenario. Next one, goods and services imported and exported outside India, I'll say. So I'll take more into this. Goods and services imported. Goods imported into India. When we import in India, there'll be a bill of entry, there'll be a custom duty, there'll be a IGST. So we have a document on the basis of which we import the goods. And that IGST being on the bill of entry, we are eligible to claim it. By a custom route it is coming and we can claim it. Just there is no provision for matching it, but on a proactive basis, you can match it with the IceGate data. And also currently now it is reflecting in 2BO as well. But as a legal provision, it's not mandatory to match your bill of entry ITC claimed on imports. Next one, services imported. In case of import of service, as a recipient, we have to discharge the GST under reverse charge basis. There is no bill of entry being filed for services imported. As a recipient, we are mandated to discharge the GST under RCM basis and claim the ITC if it's eligible. And there is a specific notification for that. For all your import of service, we have to discharge it. Now, the next says exported. Goods exported, you should have a clear document for that matter. How much goods you have exported outside India. With payment, without payment. We'll deep dive more into once we are going through with the GSTR 9 form. Services with payment, without payment. So there is always a provision under GST wherein you can opt for with payment of GST, you want to export goods, or without payment. Services with payment of GST, without payment. So that's, and how it is important, you have to maintain the documents for that matter. All your goods imported, you should have a bill of entry. You should have a clear details of all your imports of services made. How much you have paid it. Self-invoice. So these are the very important documents on all these broader goods, services imported and exported. The next point, which I was mentioning, the import of services is the different. In the GST law, within the country also, there are some transactions on which the recipient is liable to pay GST under RCM basis. Notification number 13. Let's taking an example, GTA services, your lawyer advocate services. On all these services, security services, sponsorship services, on all these services, as a recipient, we are required to pay GST under RCM basis. And we should have a clear document for that. Now, probably you would be thinking why I'm dealing with these all without going directly into the form. Unless we understand all these things, we will not be able to fill GSTR 9 form. So it's important to understand that all your GSTR 9 form is just a consolidation, and there should be a clear backup for that. And all the numbers would come from here only, all your documents. So I was talking about supplies attracting RCM. Invoices. So under the GST law, there are 3 types of invoices. One being a tax invoice, one being your self-invoice, which is a recent one, and bill of supply. So these are the invoices. We should have a clear register for that, how much invoices we have issued. Whether it's a self-invoice for RCM one, we should have a clear details for that. Because for self-invoice, on that basis only I am eligible to claim ITC. Without that, I am not eligible. On tax invoice, credit notes. Credit notes is very important. Within which time we can issue a credit note. Under section 34, there is a 30th November timeline which says within that period only you can issue a credit note. Post there to no. And when you are eligible to issue a credit note, also there is a guideline. There is an issue with your taxable value. There is an issue with your return, goods have been returned. So there are specific guidelines under section 34 for issuance of credit note. Also, the recipient has to reverse the credit note, the ITC on the credit note. Then only you will be eligible for reduction of your outward. So credit notes is a very important document. And currently, all your GST audits, which are being conducted by the GST officers, first they look up the credit notes. And because of the recent circular, they have started asking for declarations also by a recipient. So this is credit note is a very important document. Debit note, in case you want to issue a further supply, a debit note can be used. Receipt voucher for advances. Probably there's a one more point. I'll take up that time only. Refund voucher, bill of supply. In case of exempted goods or services, we are required to issue a bill of supply, which says, okay, this goods is exempted. Let's say a food, or I can say apple, or your vegetables, all are exempted under the GST. But there should be a bill of supply being issued for that. The next one, advances received, paid, and adjustment. So advances under the GST law at 2017, when GST was implemented, I can say on both goods and services, in case of advance received, would be taxable. But in October 2017, the GST on advance received with respect to goods have been removed. So currently, if you have received any advance on the advances with respect to your services, only then GST would be liable to pay for advances received. And in that scenario, you have to issue a receipt voucher. And then if that advance is adjusted against the tax invoice, then a tax invoice will be issued. If not, and you are required to refund that amount, you have to issue a refund voucher. Next one, e-way bills. So currently, e-way bills is a very hot topic by all the GST officers. Now, just to give you more insight about e-way bill, I'm taking you a little more time just to give you more initial insight before filing into GSTR 9. So e-way bill is mandated when there is a movement of goods and the value exceeds more than 50,000. You should have a e-way bill. Now, I have seen personally, there are multiple notices being issued matching your outward supply of goods vis-a-vis your e-way bill. What that means is you should have a very clear details of how many e-way bills have been issued, how many been cancelled, and how many have been extended also. So there should be a very clear details of all these. Without this, maybe we should be in a trouble in a later stage. Most likely not now, but in a later frame, some officer may compare your GST outward being reported in GSTR 9 vis-a-vis your e-way bills. And if we have the clear bifurcation of that, probably we'll be in a better position to answer that query. Little more documents. This is almost the concluding slides of the documents per se, I can say. Statutory audit report, income tax audit report, cost audit report, branch audit report. Statutory audit report, why it is important? Just to give you my, I have seen personally, I have gone for some GST audit by the department, and they started comparing GSTR 9 versus 1 and 3B, which is a normal thing. At least we now are very cognizant, okay, we have to do this, a prelim check. But there was one officer who was a little smart officer. He said, okay, 1, 3B, I'll look at very later. Let me just open the financial statement. And he started asking a very genuine questions from the statutory audit report. Where is your related party transactions? Because in GST, there's a valuation dispute for that matter. How would you identify that? Only basis the audit report, statutory audit report. Any capital goods being, I can say, sold by your statutory audit report. So more questions, I can say he started reading director's report. Any new company, any new buy you are doing up. any old machinery you are buying up or old machinery you are disposing of, any benefits you are giving to the employee, whether the GST has been charged or not. So statutory audit report is a very important document. As a chartered accountant, we all have to read this document very clearly in the context of GST. What are the opinion, let's say, being made by statutory report? Any qualification being given by him? We should be very cognizant of the part, because now GST officers are also getting smarter. The next being income tax audit report. This is also being filed to the income tax department. What turnover is being reflected in your income tax report vis-a-vis in your GSTR 9? It should tie up. If not, there should be a clear reasons for that matter. Why there is a difference? All your expenses, let's say, on which RCM is payable, legal expenses, they can have a bifurcation from income tax audit report. So that we have to match it with your GSTR 9. How much RCM we are paying on it. Cost audit report, all your, which says your how much is the cost, how much is your raw material, how much is your consumables, how much your production. That all the information comes from cost audit report. So this, all these reports are very important before filing GSTR 9 and 9C to understand what type of transaction maybe they are incurring, the client is incurring. Maybe the client is not knowing it. At least if we go through all these reports, we'll be able to understand it. Next one, signed copy of the financial statement. I think this is a very generic one. In GSTR 9 and 9C, we have to upload the balance sheet and P&L of the company. So this will be always there. The next point, consolidated GST mind, trial balance and financial statement. So GST being on a state level basis. So in my personal, I can say experience, I've dealt out with some officers. Initially, they have started asking for financial statement of particular state, which is incorrect. If you are dealing with a client who is a company by nature, they cannot have a state-wise financial statement. The financial statement can be only of a company, cannot be of a state. We have given them clear replies, okay, you cannot have that. Balance sheet, the companies that says, no, you cannot have that. They understood the point. But they started asking for trial balance, and which is a very fair point. For your 9C, at least you should have a trial balance, a state-wise trial balance. And also now currently officers are also asking for trial balance, a state-wise trial balance. So that they can ascertain what is the actual turnover in their state. What is the expenses being incurred in their state? If there are any expenses on which RCM is payable, they can have a fair share of their revenue. So trial balance is currently very important for filing GSTR 9 and later stage GST audits, because all these documents would be a ready reckoner for countering the notices or GST audit being conducted by the officers. So last would be reconciliation of figures on a GSTN level. All your outwards, all your inputs should be matching at your GSTN level on a state level basis. I think we have seen a basic understanding of what are the documents, what is the basic checks. Now we can jump on the actual topic, which is GSTR 9, and we'll be in a better position to understand this. So this is the first part. This is a very basic GSTR 9 first table. I can say it says GST number, financial year, for which financial year filing, legal name, trade name. So generally it get auto-populated. So we are not required to fill at least these details. It get auto-populated. And probably now I'll jump directly to the form. actual form so that we can understand the clause by clause what GSTR 9 table ask me to fill. First, I think we have seen this financial year GSTN level legal name. This is auto-populated, nothing to be filled by us. Now the actual form starts from here. Table 4, which says details of outward and inward supplies. All your outward, I'll take A, supplies made to unregistered person. All your B2C supplies during the year, which you have reported in your GSTR 1, had to be reflected here on a net of basis, netting of the credit note. It's not a gross basis B2C supply can be reflected. It will be a net of basis. You have to reflect the B2C supplies. You have to report it. B2B supplies, all your business to business, I can say all your GST number sales made to a registered person would be reflected in B2B, second column. And this will be gross basis. As comparing to 4A vis-a-vis 4B, the difference would be netting of the credit note. Because in case of 4B, you can reflect a gross basis, and 4A, you have to report it in a net basis. And the credit notes of this B2B would be reflected in 4I or debit note. So you have to very separately show credit notes with respect to B2B. But B2C, you can net it off. 4C, zero rated supply of goods on payment of tax. Now, this was I was talking about your export with payment of tax. So let me give you a little more insight. Under the GST law, you have two options. Either you can opt for LUT. What that means is you have to give a declaration to the GST department, or I can say portal, that we will be exporting without payment of tax. And that's valid for 1 year. Basis there too, you can export your goods or services without payment of GST on it. And if there is any ITC being accumulated, you can opt for refund. So in your 4C, we are discussing about not about LUT, but zero rated supply of goods or services with payment of tax. And with payment of tax, in case of a good, you don't require to file any refund separately. Once you file a, let's say, shipping bill, then there'll be a export general manifest, EGM, and automatically the data from your GSTR 1 and 3B, your data flows to customs and the refund flows back. They just match it to IceGate and thirdly, the refund comes back. So in 4C, all your export with payment of export of goods with payment of tax would be reported in 4C. And all what I was discussing about refund would be reported downward. I'll take it in the respective clause. Now, jumping on the 4D, supply to SEZ on payment of tax. It is almost alike the C column. The difference is here we are supplying to SEZ, special economic zones, and on the payment of tax. So 4C takes care of export of goods outside India, and 4D takes care of supplies which is made in India, which is deemed to be outside India, but we call it as SEZ, special economic zones, and with payment of tax. Table 4 talks about with payment of tax, and without payment comes in table 5. Now 4E, deemed supply, deemed export. Under GST law, there are 4 transactions which are being categorized as deemed export. If you are supplying to advance authorization, if you are supplying to export oriented unit, EOU, if you are supplying to EPCG, and if you are a bank and you are supplying to AA, advance authorization. These are the majorly 4 transactions on which we can say it's a deemed export, not actual export. Export means when you are taking goods outside India, but these have been deemed to be an export and on payment of tax. So that outward had to be reflected in 4E. Now I'm taking to 4F, advances on which tax has to be paid and invoice has not been issued. I think in my PowerPoint presentation, we were discussing about advances. In the GST law from 2017, only when July 2017, GST being implemented, there was a provision to pay GST on both supply of goods and supply of services. Advances with respect to supply of goods and supply of services. But in October 2017, advances with respect to supply of goods, GST has been, I can say, removed or exempted. But in services, it's still there. So all your advances on which GST is required to be paid, but the tax invoice has not been issued, would be reported in 4F. What that means is, let's say you have received a advance of 1 lakh rupees on which, let's say GST, I'm taking a over and above only 18,000. Generally, it'll be including, but I'm for a sake of convenience, I'm taking it over the above. So 1 lakh plus 18,000. And in this case, you have already issued the invoice. Let's say probably 2 lakh invoice. So 2 lakh 36,000. So the GST which is already being paid is 18,000. You can reduce that amount. So that tax and void will always come in 4B or 4C, either case. But if the invoice has not been issued and at the end of the year, you have to reflect 1 lakh rupees and the GST amount, which is 18,000 in this column. I'll jump on 4G. Now, inward supplies on which tax is to be paid on reverse charge basis. I think we were discussing about that. All your services on which recipient is liable to pay GST under RCM. I think I have taken examples of GTA, advocate services, sponsorship services, all had to be reflected here. All your services on which you have paid the GST. I'll go a little faster. I think we have discussed about credit note. All your credit note pertaining to all these transactions till F, till E, I should say, would be reflected or reported in I column, and with respect to debit note would be reported in J column. 4G. And if any amendments being made in GSTR 1 would be captured here. So total of your supplies would be here, including RCM, I'll say. This is our table 4, outward details on which tax is payable. Table 5. This captures the details on which the GST has not been paid. Table 5A, export of goods, or I can say zero rated supply of goods or services which has been, on which GST has not been paid. Most likely this will be under LUT. So the export which has been made without payment of tax would be reflected here. And same like 4B, SEZ on which GST has not been discharged would be reported here. And this is when I am a supplier and my recipient, let's say I am a GTA, and the company who is a recipient is discharging GST, would report that amount here. But for a supplier, for a GTA, he will reflect here because he is not paying the GST. Recipient on his behalf is paying it. Now 5D, all your exempted supplies, which we were discussing. Let's say I'm a, probably I can say I'm a big bazaar and I am selling vegetables. So these are exempted under GST. So I have to report that turnover under this column, 5D. And if it's nil rated, then 5E. And same like if I am let's say if I'm a company who is engaged in the manufacturing of alcoholic liquor, then because these liquor or petrol is outside the purview of GST, they are being considered as non-GST supply. So all your turnover with respect to, let's say, petrol or your aviation turbine fuel, ATF, or your liquor sale would be reflected in this F column, 5F, non-GST supply. Now, all your credit notes with respect to all these credit notes would be reflected here, and debit notes with respect to the same, I can reflect it here. And if any amendments have been done, for sure I can report it here just to match it. Now, this is my total turnover as per GSTR 9, including advances. I think we have seen how outward has been reported in GSTR 9. Now, I think I was earlier mentioning this figures will get auto-populated basis your GSTR 1. So you can amend these figures. If you open your GST portal, you will see that there are figures being already there. So that figures have came up from your GSTR 1. You can check these basis your books of accounts, your actual returns, and then probably you can, if any change is required, you can do that. I'll come to table 6, which is the ITC. Now, table 6A, first, I'll mention these figures will also come from GSTR 3B. Not these figures, but yeah, this one. Table 6A, which is an auto-populated figure, which comes from your monthly GSTR 3B. This is a total amount which in a financial year, if you have claimed it, would get auto-populated here. Now, B, C, D column, you have to give a breakup of all these. Because in a monthly GSTR 3B, we don't provide a line level detail like we generally do in GSTR 1. So that's the reason these figure doesn't auto-populate. And for input, these amount, our ITC ledger, our books of account will keep us handy. And basis only we can input these amount here. What is the inward supply on input? Capital goods, input services. Inward supply on this unregistered person liable to pay if we are liable to pay the GST under RCM. Both the same one. I can say inward supply received by registered person if I am liable to pay the GST. So these figures have to be reported on the basis of ITC ledger, our purchase register. Now, E column says import of goods. If we have imported outside India, there will be a bill of entry. Whether it's input or capital goods, we can bifurcate it. So that input which we have claimed on import of goods would be reflected here. And import of service, which we were discussing, it's by us. Under RCM basis, we have to pay it. So that'll be reflected here. And there'll be a self-invoice for that. Only basis the self-invoice, we can claim the input on the import of service. Now, this is input credit received from ISD. If you have multiple states, if you have multiple registration, and from your HO, I believe, they have distributed the ITC by way of ISD registration only. Then the recipient states can claim the input tax credit on the same. In this G column. And just to mention, ISD has been made mandatory from April 2025 onwards. So we have to be very cognizant if in a company and they are operating in multi-states and there is an implication for ISD, we should take a registration and we should start distributing the common ITC. with respect to services to the respective states. So most likely by next year onwards, we'll see a major chunk in this table as well, for at least companies who are present across various states. Now, H column, which I was earlier discussing, amount of ITC reclaimed. So the classic example was, if I have not paid the supplier within 180 days, I have to reverse it along with the interest. But once I make a payment to him, I'll be eligible to claim the ITC on that purchases. This would be 6H. Now the totals of both difference. Ideally, there shouldn't be any difference between your auto-populated 3B, because you're just giving a bifurcation of the same amount. In a monthly return, if you have claimed 100, probably you are just giving 10, 20, 30, just a bifurcation of that. In a normal circumstances, there shouldn't be any difference. But if any difference is there, maybe you have to understand why there is a difference. What are the probably purchase invoices which I have reported in 3B, or maybe I'm not reporting here. Then only your documents, all your details will come handy and it'll give you a correct picture. That's the reason I was discussing about that. Now, this is Tran 1, Tran 2. I think now it's not much relevant because it was initially relevant. Now it is all gone. We have been almost passed away that phase of the transitional one. Now, table 7, details of ITC reversal. Rule 37. I think I've mentioned this multiple times. If you have not paid a supplier within 180 days, probably you'll be required to reverse it. So that reversal amount would come here. And once you have made the payment, you can claim it, reclaim it. Rule 39, which relate to ISD. If, let's say, a wrong credit has been given by ISD, you have to reverse it. Nothing much implication, but okay. Rule 42, 43. I think this is the most important. If your client is in the business of exempted and taxable supply, then probably all your common ITC on inputs or input services had to be reversed with respect to your exempted supply, had to be reversed under Rule 42 and Rule 43. 43 is specifically for capital goods, and for raw material and input services, inputs and input services, there is a rule specifically, Rule 42. And there is a specific formula T1, T2, T3, which probably we can discuss it at some later sessions. But it's a very important, if your client is in the business of dealing in both exempted and taxable, then your proportionate common credit is required to be reversed under Rule 42. And proportionate capital goods, ITC on capital goods had to be in Rule 43. Section 17.5. I think this is the most important section, which says you are eligible as per 16, but there is a laundry list of I can say inputs or input services which a taxpayer cannot claim it. I can give you an example of insurance services or works contract. I think recently the Supreme Court has delivered a safari retreat judgment, and the hottest, the moot point was 17.5C, clause C and D, and how they have interpreted plant or machinery, plant and machinery. That all controversy has been evolved by section 17.5. So it is the most important section. Everybody should understand it. And if there is any reversal, if you have claimed it, then probably you have to reverse it. If you have not, I don't think so there should be, because now because of the circular 170, now the reporting requirement has also been changed. GSTR 3B has been changed. You have to claim as per 2B and then reverse it. So probably in your return under 4A5, this would be there. and then all your ineligible had to be reversed, 4B1 or 4B2, as a permanent reversal or a temporary reversal. So that amount which you have reported in 4B1 probably would have to be reported here. Now, I'll not touch upon the Tran 1, Tran 2 as this is already passed away the timelines. I don't think anybody would have these. Other reversal. If any other reversals are there, probably you can show here. Take an example, if your company has demerged and you are by ITC 01 or 2, I believe so, you are giving your ITC to your demerged company, all your reversals will come here. Now, this is your net ITC eligible for utilization, 7J. After all doing, plus you're reflecting your ITC eligible, how much is you have claimed it, how much you have reversed it, Rule 42, 43, 17.5. This is your net ITC available for utilization. Now, the table 8A, which is the most favorite table by all the GST officers. By just seeing the difference of this, they generally issue the notices without understanding how the numbers have been input. So probably just to not have these notices, we should be little more prudent how we are reporting numbers in table 8. Now, table 8, I'll not say table 8A, table 8 is your ITC as per 2B. It will be an auto-populated figure, and you will have an Excel sheet which says, okay, these are your ITC, which is being reported by supplier. You have to match all these documents. Now, table 8B is just a summation of 6B and 6H. So it's just flowing from upward, nothing much. And which says, okay, you have claimed during the year, you have claimed these numbers. You have claimed this ITC. So this is just a summation. This is also auto-populated. Now, table 8C is what we can input. And this amount or this ITC is, I can say section 16.4, which says you can claim your ITC with respect to current year till 30th November of next year. Giving an example for financial year 22, 23, 24, which is the current financial year, we have to claim all your ITC, all your invoices dated 23, 24 by 30th November in your October return, which can be max filed by 30th November. Just to mention here, you can increase your liability by GSTR 9. But all your ITC can be claimed only by GSTR 3P, not by GSTR 9. So all your ITC, which had to be claimed of previous year, had to be claimed by 30th November. Now, I think just probably 15 days are still left. We can all match our books. We can match our 2B. Whatsoever lying ITC is there, we can still claim it. And then probably, yes, R9 would be correct. So by inputting all your C column, the difference should be 0 or a positive one. If it's negative, then probably you have to recheck it. What are the details which is not reflecting in 2B, but you have claimed it? Because now you can claim only ITC which is matching in your 2B. So in your normal circumstances, it should be there. Could be a reason this ITC has not been reflected, probably last year. Then there could be a difference. You can still check it. Now, difference is okay. If there is a positive amount, then it should be bucketed under 2. ITC available but not availed, ITC available but not eligible, either of the two. It means in your 2B, amount is there, but you are not able to avail it because of the timeline, could be because 30th November timeline has been passed by, you are not able to avail it. ITC available but not eligible. So there could be 17.5 entries, which is still reflecting your food, your travel, I can say employee related expenses, which is still available in your 2B, but as per section 17.5 works contract. So there are other also which you cannot claim it. So that available but not eligible to me. Now the next point says IGST paid on import of goods. I think we were earlier discussing whatsoever IGST, including SEZ, you have paid on import of goods had to be reflected here. And how much out of which you have claimed it. And the difference should be same. Now, after taking into account, there will be a total lapse or there will be a positive or negative figure. Be cognizant of these numbers. Because anyhow, the officer would ask the difference of these numbers. I'll take up to table 9. This is summation of all your GST paid through cash or ITC. This I was discussing earlier. This is the auto-filled amount and this you cannot amend it. ITC paid via ITC. This comes from 3B. How much you have paid in 3B by way of a cash or ITC comes here and sits here. But this tax payable is, you can amend it. Now the logic of this, which earlier I was discussing, this tax payable comes from upward. This total tax payable, from here it comes in. How much is the total tax payable? So maybe in your case, you might have forgotten to report any supply. Now you can discharge the difference of it. But you cannot use tax payable. There will be a difference in 9C that you can show in a reasons for that. Okay, this is the amount which is, I forget to mention in my monthly returns on GSTR 3B. I'm ready to pay by this 30th December. Okay, I'm paying through DRC 03. So that amount can be taken care. But this you cannot change it. And interest and penalty, anything, if you are paid during there, will auto-populate here. Part 5. So this table specifically talks about all your ITC, all your reversals, all your amendments after the year, before 30th November. So as per section 16.4, we have a timeline. We can claim it in next year. That's okay. But we have to report it in these tables. If any supplies has been amended or reversal have been done in the next financial year or ITC have been availed, we can report it here. But this is optional as of now. These 12 and 13 are optional. But as a matter of prudence, we should fill these amounts because it helps us in response of, let's say, notices or in GST audit. Generally, it helps us. Okay, how much is the amount of ITC which you have claimed for the previous years? But as of now, these are optional. We can input, let's say for financial year 23-24, I have claimed in April 24, I will fill these details in 13. And if any reversal has been done, I'll fill it in 12. Now, table 14. Any amount has been paid because of 10 and 11, probably I am paying extra amount, that I'll reflect here. Now, table 15. This is the details for refund, which I was earlier discussing, export of goods or services. And if any refund has been claimed because of, let's say, with payment of tax or without payment of accumulated ITC, I have to fill all these details here. total amount claimed, total sanctioned, refund rejected, total refund pending, how much is total paid. All these details with respect to refund will be reported here. Now, table 16. This is also an optional table, but I'll take a moment for this. So all your supplies which have been received from a composition taxpayer. What do you mean by composition taxpayer? So they have a special rate for composition. They are not required to issue any tax invoice. So they can supply to a taxable person. We can purchase it from them, and all your supplies being received, all your purchases being received from composition taxpayer had to be reported here. But this is optional still. We can still fill it, not a problem to us. Deemed supply under section 143. So section 143 says your job work. If you are sending any goods for a job work and within 1 year, it should come back. If they are not coming back the goods, within 1 year, it doesn't come back to the principal, then it will be deemed to be a supply to the job worker. So that deeming, that sale would be here. And goods sent on approval. So under the GST law, there is a provision which says you can send your goods on approval basis for 6 months. And if it doesn't come, but in a GSTR 9, it is optional table. Table 17. So this is the most important, which I was earlier talking also. There could be a difference between your HSN summary and your outward supply reported in 4 and 5. You have to see that both. It should be same. Here, both should be matching. But I have personally seen the notice of or GST audit observation have also been made on this point as well. HSN summary reported in GSTR 9, table 17, vis-a-vis 4 and 5. Is any differences there? What is the difference? And this is mandatory. Earlier, 2 years back, it was not mandatory, but it is now made mandatory. So we have to show outward supply HSN wise summary. But for inward supply, it is still optional. We can still not reflect these amounts, but this is very important. HSN wise summary of the outward supply. Now, last would be late fee payable and how much actually been paid. If any late fee has been paid, how much is amount payable and how much has actually been paid. So I think I have covered completely GSTR 9. If any questions are there, you can please let me know.
Sir, we have received few questions.
Sure.
Can we start the Q&A, sir?
Sure, sir. Sure. For GSTR 9, yes.
The first question is rectification of incorrect HSN codes possible through GSTR 9?
Yes, we can do that.
Then
for outward supplies.
the next question is okay. The next question is table 8A for financial year 23-24 will be based on GSTR 2B for April 2023 to March 2024. GSTR 2B contains inward supplies pertaining to previous financial years and financial year 23-24. 8A auto-populates summary of 23-24 financial year in ITC only, or it will include 22-23 financial year ITC available in 23-24 2B also.
So the total is now auto-populated. Also, there is an invoice-wise detail on an Excel basis is available in the same GSTR 9. We can download it, we can match it, and most likely it should be financial year 23-24 only. It shouldn't be 22-23. It should be all your ITC which is available in your 23-24 should be coming up. And for sure you can download the Excel and you can match all these. And basis thereto, you can report it.
So the next question is from C.A. Chandrasekhar. What if advance is received for supply of goods, but the goods is not delivered for more than 12 months?
Sir, for advances, there is no GST on that. On goods, there is no GST. Only for services, on advances, there is a GST. Even if you don't deliver it, whether the tax invoice has been raised as per place of time of supply or not. That's an important point.
Next, from the same participant, there is another question. Can we switch between exports on payment of duty and export under LUT within the same year?
I think yes, you can do that. I don't think so any bar is there. You can have some invoices on export with payment and some invoices on without payment under LUT basis. So there is no bar as such. You can use both.
Next question is from Poonam Jain. Can we claim ITC on inputs in GSTR 3B pertaining to goods exported under LUT?
Most likely, I think this question says you have exported goods and there is some ITC with respect to the same. If that is a question, I'm presuming it. If any services has been taken for that goods, for sure you can take it. Because these are goods exported outside India, it doesn't mean it is exempted. It's actually zero rated supply. And also, if you have claimed ITC, for sure, if there is any accumulated balance, you can go for refund also. But that should be, I believe, that is only for export only. Let's say you have taken any GTA services or export, probably consignment, the shipper services, that you can always claim it in GSTR 3B.
So, next question. In table 4I, should we report credit note pertaining to only B2B sales or B2C also?
So for I, I'll take it directly. So for I is only B2B. For B2C, I think I'm dealing the same one. B2C is always net of credit notes. Also, the table very clearly says B2E, which is excluding your B2C, you can report it. For B2B, zero rated supply to SEZ and deemed export, credit note pertaining to that can be reflected in 4I.
Next question is, should we report exempted and nil rated supplies like bank interest, agriculture income in GSTR 9 if the same has not been reported in 1 and 3B?
If that is not reported in 3B, but ideally it should be, at least your bank interest, normally I don't think so anybody is reporting it. I may have to check this point. I'm not sure of this.
Okay. The next question is from Nagaraj Giri. In table 6A, the value is auto-populated from table 4A of GSTR 3B. Gross input considering GSTR 2B plus input reclaimed. However, it does not consider the ITC reversed in table 4B of GSTR 3B. Other columns, as the invoices are not accounted in books, which can be to 6H, will have the net figure as per my input register. So there will be differences in table 6J. What to do in this?
I think it's a very fact-centric question. Probably he is encountering some specific issue. Most likely we may dealt more in it. But in a general circumstances, I can say 6A is your auto-populated basis your 3B. How much actually you have reported in 4A, 4B, 4A, 1, 2, 3, 4, 5. And if any, that 4A, 5 would, total amount of that would get reflected here. And just a bifurcation would be here. If you are reclaiming, there is a circular 170 which says 4D1 may you have to report it and 4A5. Then probably you have to take into account that circular. Basis there to only this numbers will get auto-populated. But this is non-editable. You cannot change it. My answer would be him. Just check how you have reported, whether is in line with that 170 circular, what says the reporting requirement as per that circular under GSTR 3B. Have you complied with it? If you are properly complied with, I don't think there should be a difference. Because that circular was intended that the numbers are correctly reported. And basis there to only your GSTR 6A table get auto-populated.
So next question is from CA Vishnu. When table 8A is flowing from GSTR 2B, is there a relevance for table 8C, 12 and 13, as GSTR 2B is not based on year of purchase, but year of upload? As if any value is entered in table 8C, it would automatically make the ITC claim increase in most cases, which is not the actual case.
Sir, I'll tell you one thing in this question. Table 8A, let's say all your invoices which dated 23-24. What that means is the supplier has indeed made the reporting and GSTR 1 in the 23-24. However, you are not claiming it. So this total of both should get tied up this, because your 2B will always be much more than how much actually you're claiming. So I don't think so there should be a difference. Difference could be of your previous year. Yes, there'll be a difference of previous year. You could have a difference, no problem, but you should have a justification for that. If you have a clear line level breakup of that amount, then probably, yes, you will be indeed able to justify to the officer that this is the difference because of the ITC which was not reflecting in table 8A of financial year, last financial year, 22-23. Yes, that is the difference would be there. And that could be justified because of the last year basis. In that case, there will be a positive. In this year, there will be a negative. You can, on totality basis, you can show to the officer that indeed you have not excess claimed it. This table is just to understand by the GST that you are claiming only basis your 2B. Whether in this year or next year, probably yes, it can be a 1 year positive, it can be 1 year negative. But that can be justified in your reply. You can see 2 years, 1 year will be a positive, 1 year will be a negative. If that is so, then you can always justify to the officer, okay, you have actually claimed right. Because of the form is made in such a manner that it doesn't reflect previous year. That is a hindrance to us. Unless I'm not claiming any excess amount. All my ITC is reflecting in 2B. I think I'll be able to, I think my answer makes sense of him.
Yes, sir. Next question is from Preksha. If RCM has not been paid for financial year 23-24 and input also has not been claimed in financial year 23-24 in 3B, I have made payment for the same and claimed ITC on RCM in financial year 24-25 3B return. How do I show the same in 9?
24-25 will not be part of your 23-24 because all your transactions have been reported in 24-25. You have made your I believe he has booked in the 24-25. You are not in returns, not paid anything. Everything was done in 24-25. Ideal situation would be take the entry in 24-25 because in case of a RCM, you claim ITC only on basis of your self-invoice. I believe you would have generated your self-invoice in your 24-25 only. So better to report it in that year.
Done. I guess extension of that question, she is trying to claim, say, 23-24, say in April month. The invoice should have been raised in April. But in 24-25, she has raised the RCM.
Yeah. Everything is April 24 only, no?
No. April 23 was the supply.
Okay.
RCM she has generated in 24-25. I guess that credit timeline missing is what she is trying to ask.
But and now the circular, I think now the circular is very clear. The recent circular 210. On the basis of your self-invoice, you can claim it. It's a matter of only interest and interest only. So probably better to claim in next year. Anyhow, 2B will not have these transactions. You can claim on your basis of self-invoice. Better to report it in next year. That's my simple sense. Because anyhow, you have made the payment in next year. You have claimed ITC only in this year. If you try to report it in this year, there will be a difference.
So next question is from Mr. Mahesh Prasad. If negative difference comes in table 8, what should be the further procedure?
So negative difference is there, then you should have to match with your 2B on a line level basis. Why there is a negative difference? You should have a line level breakup. Okay, why there is a difference? What are the entries which you have claimed in 3B, but which is not appearing in 2B? Clear bifurcation would be there because there'll be a notice with you. Not now, maybe a time would tell you. But negative difference is one which all the officers are looking up. So better to have that clarity, which I last mentioned. Probably it's a case wherein that ITC pertain to previous year. So might be you have a positive difference in your previous year. So just try to match it on a line level basis. How come the negative difference is coming? Probably the invoices pertain to current year, or maybe the last year invoices you have claimed in September might be.
Sir, there are two questions related to the same aspect.
Okay.
It is interest income which is exempted. What is the definition of supply with relation to interest income? Should it be reported in GSTR 9?
Maybe I have to check upon this here. I may not be in a position to tell you on interest income specifically.
Okay. Next question is for exempt goods to raise invoice B2B with zero rate to be filled in GSTR 1 in zero rated, as there is no exempt column to fill in. And how to report in GSTR 3B, as there are auto filled in zero rated. Is it right, or to fill in exempt?
No, exempt column in GSTR 1, there is a specific column. To my knowledge, there is a specific column under GSTR 1 for exempted supply. In GSTR 9 also, there is a specific column. Yeah, I'll say 5. There is a specific column under 9 also and in 1 also. Maybe you have not reported correctly. Then probably you can report it now in the correct table. At least 5 days. Now this annual return is the correct opportunity for you. You can report correctly in this. And if they are reported in nil rated also, I don't think so there is a problem. Exempted or nil rated, you can at least report it correctly in this return, in annual return. But I'm sure in 1, there is a specific column for exempted supply. But now you can use this opportunity to correct your mistakes.
Next question is a general question. Is there any time limit for generating self-invoice for supplies and RARs?
No, as of now, earlier, yes, there was a timeline. But now because of NOS issue, the government has relaxed the timeline. You can generate it in next year, but there will be an interest implication. Your POT starts in within 60 days or payment as per section, I think 13, if it's a services. Section 13.3 says 3 of the earliest date, whether it's a date of payment or 60 days from the date of supplier invoice or your self invoice. You can generate the POT starts in earliest of the 3. You can generate it in next year also, not a problem. But still the interest will be always triggering. So the implication would be of interest. And on the basis of your self invoice, you can claim ITC in next year probably. Let's say for financial year 23-24, you have generated self invoice in 24-25 in April. You can generate that, not a problem. But there'll be an interest. And basis self invoice, you can claim ITC.
Next question is from Madesh Jayaraju. How to declare the cumulative ITC reversals and reclaimed related to previous years?
So there is a specific column. I think, yes, we were discussing about that. Reversal and reclaim. Your reclaim Reclaim is here only. If you have reversed within the same year, let's say because of 180 days, you can claim it. You can reverse it, and probably next year you have claimed it. You can show in this column. So there is a specific column under GSTR 9. I believe it is for 180 days.
Next question is from Rohit. Should multiple GSTR 9 be filed if registered person has multiple registrations in same state?
No, if you have multiple GSTN, then in a normally, I'll tell you very normally, people don't take multiple GSTN in one state. If you have multiple GSTN, yes, in that case, yes, you'll be required to file multiple GSTR 9.
Second question is, will 4F take a negative figure? Example,
Sorry?
advance received in previous financial year adjusted during current financial year is more than normal supply.
I think this will be correctly reported in 9C. In 9, advances on which invoices are not issued would be reflected in table 4. The circumstance which you are mentioning would get triggered in, it would be required to be reported appropriately in 9C, because you'll be reconciling with your books of account, with your financials. In 9, the table says very clearly, okay, how much you have advances, out of which how much you have already issued the tax invoice, because for that matter you have already discharged GST. The advances on which the tax invoice has not been issued would be required to be reported here, because in your financials it will not be a tax invoice, there will not be an income. That's the reason we are trying to match it. In 9 it is very simple, but yes, 9C will be required to report it appropriately. Financial year last year advances and current year advances, which would be later on taken care, I think, by the respective panelist.
Yes, I think this is the last question, sir. Very close to this. In case of import with payment of tax, if there is freight charges included in invoice, should we pay tax on freight charges? And where should we report this?
No, in case of import of goods, there'll be a clear freight. I don't know, freight would be included. I don't think so. RCM is not there now because of the Mohit Mineral judgment. In case of freight, I can say ocean freight, there will not be any GST on that RCM basis. But if it's a fixed, which I recollect 1% is fixed by the customs. Generally, in a bill of entry, you have very clearly 1% clearly showing it, and which is already included, which is a deemed one. Then you have IGST, BCD, IGST, and whatsoever cess is there. You can claim it. But if it's a question of ocean freight, if you are paying because of it's a, I can say, FOB contract, and I'll not say FOB, CIF contract, and you're paying on it, then probably there is no requirement to pay GST on RCM on ocean freight because of the Mohit Mineral judgment. And I think later on, there was one more judgment came up for both FOB and CIF. So that takes care of both. But I don't think so there will be any separate freight in bill of entry, which I have not seen personally. There'll be a separate invoice can be there, and that can be taken care. If it's a ocean freight, then it's okay. If it's a local freight, for sure RCM would be there. It's a GTA transaction. But in bill of entry will not be there.
Sir, I think we have answered all the questions, sir. Thank you so much for the wonderful session, sir. Your clause by clause analysis of GSTR 9 was very helpful, and it will help all the participants to file the GSTR 9 in a correct and right manner. So thank you so much, sir.
Thank you. Really, thank you. Thank you for the opportunity.
Next, we have Ashika Agarwal for the second session on GSTR 9C, and it will start sharply by 2 p.m. Thank you so much. Thank you, everyone, for joining. Please join by 2 p.m. for the next session. Thank you so much.
By multiplying with rate of taxes, we get our gross liability. So this is what is being taken care in part 2 and part 3, where taxable turnover is derived in 9C based on audited financial statement. Then comes your part 4, which deals with input tax credit. Now, as I said, it doesn't mean whatever expenses, wherever GST has been charged, all are not eligible ITC. Now, we have to keep in mind section 16 and 17 in order to determine the eligibility. Based on that, it will be determined out of total ITC recorded in books, how much is eligible ITC. And that eligible ITC will be only against the taxpayer, which is what is taking care of part 4 of 9C. Part 5 deals with if there is any other additional liability which has arisen, which has not been paid, can be discharged through part 5. So this was the basic understanding with respect to form GSTR 9C, tables, and what the purpose the department is looking into this form. This is table by description of what we have discussed. Now, another important thing is to understand the context of annual return and reconciliation. We are filing 2 forms at the end of the financial year. One is 9 and one is 9C. But why 2 forms are needed and what's the difference between the 2? When we see GSTR 9, over there we disclose what has been done, hence what we have reported in 1 3B and what taxes we have paid. But when it comes to 9C, over there we say what is payable. So there is a difference. 9 is more of a disclosure of what has been paid, and 9C is a disclosure of what is payable. So it serves as a comparison between what is payable and what is paid. So if I say you that if suppose my books turnover is 100, same is disclosed in 1, same is disclosed in 3B, 9 will also come 100. But if there is a different scenario, now suppose what is there in books is not captured in R1, but you have paid in 3B, then also it will form part of GSTR 9. So my books is 100, my 1 is suppose 80, my 3B is 90, my GSTR 9 will be 90 because what is the taxes paid. But if I say my books is 100, my GSTR 1 is 80, and my 3B is 70, then my 9 will be 70 of what is taxes paid. But it will also include the tax which has been paid through DRC 03. So the balance amount, if I have been paid through DRC 03, then it will also form part of GSTR 9. But when it comes to 9C, it will be always based on books, and therefore it will always be 100 rupees what is showing in books. But same doesn't goes for GSTR 9.
Excuse me, Ashika.
What?
Your screen is not visible.
Oh. Now is it fine?
Only the first.
1 minute. Is it now visible?
Yeah, now it's visible. Thank you.
You want me to take it from start or is okay? Should I continue? Hello. Sachin, do you want me to take it from start or should I continue?
Now the screen is visible.
Screen is visible. I'm asking, should I continue from start or from where I stopped?
There are many requests to start from the beginning.
Okay, fine. Screen is now visible, na? No issue. Okay. So I was saying, this will be our flow of session where we will be understanding about GSTR 9C. We will be understanding what is the context of annual return and reconciliation statement. What are the prerequisites for filing GSTR 9C and key validation before filing GSTR 9C. So before going into the forms, let us first understand what the department is looking into through these forms. Now, department main purpose is to check whether the tax payable has been paid or not. So when I say compliance with GST law, their focus is to check whether the tax which you are liable to pay, have you paid it or not. Even when I say tax liable to pay, they are more focused in how much tax has been discharged through cash. So gross liability minus input tax credit, which is what the net tax liability is their focus. Now, if I go mathematically, how I will drive this, this is what is taken care in GSTR 9C. So in order to get gross liability, what I require? I required a turnover and I required a rate of tax. Now, when I say turnover, it does not mean total turnover, it means taxable turnover. How I will drive taxable turnover? By reducing the total turnover or aggregate turnover by exempted turnover. There I will get my taxable turnover, and based on the rate or classification I have used in GSTR 9, where I need to show what are the HSN code, they will come to know the rate of tax applicable. By multiplying the taxable turnover with the rate of tax, they will get my gross liability. Then comes the part of input tax credit. Now, when we say input tax credit, it doesn't mean total input tax credit which you have accounted in books. Now they are looking into what is your eligible input tax credit out of the ITC account. This eligible input tax credit minus your gross tax liability will give them the net tax payable. And this is what they are looking in your GSTR 9 and 9C. Because from those forms, as we have seen, GSTR 9 not only consists of what has happened during the period, but it also shows the impact which has been carried forward in the subsequent year by way of filing GST returns. So all the adjustment, including the prior period adjustment, are taken care in GSTR 9. Then what's the HSN classification you have used is also reported there. Now in 9C, credit to the PL, because we attach our audited financial statement over there while filing our GSTR 9, they come to know what are the types of income we have recorded in books and what is the turnover on which we are paying the tax. Then they also check about the valuation, because if my audited financial is showing 100, I paid tax on 10. Obviously, they have to check whether the deduction I have made is it on account of what? It may be due to exempted turnover, it may also due to valuation. Then time of supply. Tax also need to be discharged on time, which is basically governed by section 12 and 13. So from GSTR 9 and 9C, they will be able to check whether the compliances which are required under GST law has been made or not. With this purpose, understanding of purpose of GSTR 9C and 9, let me take you to the form. Now, what we have discussed, the purpose, that is what is taken care in our GSTR 9C. So, if you will say, see, GSTR 9C is divided into 5 parts. Part 1, which consists of basic information. Part 2, which consists of turnover details. So part 2, the turnover details, which is starting from audited financial turnover, coming to the GST turnover in table 5, and then coming to the taxable turnover in table 7, what it is taken care. So from there, officers are able to identify what is the turnover I am offering for tax. Then part 3, obviously the turnover which are offering for tax, they have to also check what is the rate of tax applicable. As I am giving rate-wise bifurcation in table 9, with the HSN classification in GSTR 9, they will be able to verify whether the rate opted is correct or not, and based on which they will be able to identify what is my gross liability payable for the period. Then part 4, which take care of input tax credit. Now over here, it starts with the reconciliation with books. Means, as I said, total ITC as per books does not become equal to eligible ITC. So based on what has been accounted in books and what I have shown as carry forward, brought forward eligible ITC, and even in table 6, 7 of GSTR 9, over there also I am reporting about my ITC detail. They will come to know whether I have done proper ITC compliance in law or not, or I have claimed eligible ITC or not. And for this purpose, table 14 serve as a major thing. In table 14 of GSTR 9C, we give expenditure-wise details on which we have availed the ITC. So when we are giving expenditure-wise our detail on expenses based on which we are claiming ITC, over there also, they get the bird eye view that in case is there anything which is ineligible, they have claimed. Now, if you will notice 9C, table 14, they have also capital goods. Now, they can check whether the ITC which I am disclosing as capital goods is all related to other than motor vehicle or not. So that checking they can do through this GSTR 9C. And there are obviously other instances also. Expenditure wise, not only help them to identify eligible ITC, but also RCM liability. If anything shown as legal and professional, they are definitely going to ask you, give the breakup to check any RCM is there or not. Any in relation to transportation expense if shown. So table 4 of GSTR 9C, sorry, table 14 of GSTR 9C serve two purposes. Once to check ITC eligibility and once to check RCM liability if any. And part 5 is the additional liability. If any liabilities arises on account of being payable, that can be disclosed and paid over there. This is basically plotting of the data which we have discussed. So for gross liability, as I need taxable turnover and GST rate, taxable turnover, to drive taxable turnover from table 5, I get from audited financial GST turnover, and that table 7, I get the taxable turnover, because in table 7, I will be reporting exempted turnover. By reducing my GST turnover from exempted turnover, I will get the taxable turnover. And GST rate data, rate wise, I disclose in table 9 and 10 of 9C. From there, I will get the rate, and based on that, I will get my gross liability. Now, eligible ITC, table 12, which deals in GSTR 9, table 12 deals with ITC reporting. Over there, I have to give my reconciliation with books, which also need to be reconciled with GSTR 2B in order to check for the eligibility part. And then we give expenditure wise. So over there also we check the eligibility, which is reported in table 14 of GSTR 9C. So with this understanding of the form of 9C, let us understand what the context of annual return and reconciliation. Now, there are two forms prescribed, which need to be filed at the end of the financial year. So one is 9 and 9C. So what's the difference both of them serve? Now, if you will see 9 is more of the reporting of what is being done. Means on what amount I have declared in 1 and 3 and on what I have paid the taxes. Or ITC eligible, not ITC eligible, what ITC detail I have reported in my GSTR 3D. But when it comes to 9C, it is more of the check to see whether the tax payable as per my audited financial statement has been properly paid or not. So it does not deal only with what has been done, but what need to be done is what is taken care in 9C. Just for example, if I say my turnover in books is supposed 100 and my R1 is showing 80, my 3B is showing 70, my GSTR 9 will be based on 3B. What tax has been paid is 70. But when it comes to 9C, it will be always based on books, that is 100 rupees. But if any taxes has been paid through DRC 03, then also it will form part of GSTR 9. So out of 100, suppose 30 rupees you have paid through DRC 03 and 70 through 3B, both will form part of GSTR 9. But if has not been paid, then GSTR 9 will consist of what has been paid and not what is payable. However, Obviously, at the end of GSTR 9, you can pay the return. In online, they allow the facility to file DRC03. So you can also add the amount which is payable and paid. So if basic difference I say is GSTR 9 is basically a statement of fact, means which basically disclose what has been done. And 9C, we have to show what is payable. So with this understanding of the form and what is the difference between 9 and 9C, let us move about the filing of GSTR 9C. Now for filing of GSTR 9C, what are the source of information which I require? Primary source of information for 9C is audited financial and GSTR 9. These are the primary document which is required for 9C preparation. Now GSTR 9 is based on 3B1 and 2B, therefore it is taken care through GSTR 9. But it may also be a case I may be requiring additional information is about the impact which has been taken in next year of 3B. Or there may be an impact of previous year reporting of GSTR 9C in the current year. Any payment which has been made through DRC03. Any notice or order which has come or refund claim related. Now, this notice, order and refund claim are more particularly from GSTR 9 point of view, because over there we have to give separate disclosure. But for 9C also it serves as the purpose to decide, because there may be a case after receive a notice or order, the client may decide to pay through 9C. So that can be checked from there. Now, as we understood what are the information required for filing of 9C, now we have to understand what are the steps involved. Now, before filing our 9C, we first need to finalize our turnover, our taxable turnover on which we are liable to pay tax. One. Then we have to also check the eligibility of input tax credit. What is the input tax credit which I have claimed is eligible or not. Now, if you see audited financial statement or books of account, what is there? There is an income. But when we see from GST point of view, what we have to look into it is the supply. And there is a difference. What is recorded as an income may not be a supply, and what is a supply under GST may not be recorded as an income in audited financial statement. Now, why I am saying that this reason will exist, and there is a chance that every time what has been recorded as an income in audited financial statement may not match with what is a taxable turnover under GST. Why? Because when we see books of accounts we prepare based on Ind AS and IFRS. So income are recognized based on that. But when we see supply, GST, it is to be lead with section 7, 9 and 11. So based on that, it will be determined whether first it is a supply or not. Second, as I said, books of account income is recognized based on Ind AS and IFRS. But taxability to pay the tax under GST arise based on time of supply. That is section 12 and 13. Then the part of matching concept in audited financial statement. If we see financial statement, we recognize in a service unbilled revenue based on matching concept, because as we have booked the expenses, we book a corresponding income also, call it as unbilled revenue. But when it comes to GST, as I said, it is based on time of supply, and plus invoice plays a major role over there. So even though I might have booked as a UBR, but still under GST, it will not be recognized as a supply until and unless I raise the invoice, which will be basically dependent upon the terms of the contract or completion of service or supply of goods. So based on that, it will be decided whether it is a tax, time to pay the liability has arisen or not. Another example is your credit note or debit note. Now in books of account, irrespective of fact, I can recognize credit note or debit note at any time, and I can reduce my income or increase my income correspondingly. But when it comes to GST, there is a specific provisions for credit note and debit note, that is section 34. Now for debit note, there is obviously no time limit under GST because it is an increase and government is most welcome to collect the tax. But when it comes to credit note, as it will allow the benefit to the SSC, they have specified certain conditions. So if I satisfy those conditions, that is, first thing is it should be a credit note as per law. What I have noticed in certain circumstances, people raise credit note even when it is a bad debt. They didn't realize the payment, they raised a credit note. If discount is also one of the things, if they are not going to realize the money, they record it as a discount. In those cases, I can reduce my income for income tax purpose. But from income tax purpose and even for audited financial statement. So my income get reduced. But when it comes to GST, I can't do. For credit note, they have specified specific circumstance, only then I can take the benefit. First thing, that credit note should be with respect to I might have charged my taxable value or rate wrongly. So then I can issue credit note. Or where there is a deficiency of provision of service, or where there is a good return. So there are specific circumstances only when the credit note can be raised under GST. Plus, this specification also comes with time limit. That as of now, we are discussing more focus on financial year 23-24. So my credit note should be raised before 30th November and should be reported before 30th November, as October returns are going on. So this is the last opportunity to disclose those credit note and take the benefit. So it may be a case I might have raised a credit note in relation to suppose 20 to 23, and which I have not disclosed in GSTR 1 or 3B of 23-24, and I have raised in December month. So as I have raised in December month, my income for the purpose of audited financial got reduced. But when it comes to GST, I will not get the benefit. I have to add it back to my audited financial statement in order to get the GST turnover. So there can be multiple reasons of difference between what is shown as income in audited financial statement and on what I'm liable to pay tax under GST. Now, another instance, if we see, which is the one of the important also is, until and unless there is any monetary value received, we does not recognize as income under our audited financial. But under GST Schedule 1, there is a concept of deemed supply, which is even without consideration. So that part also need to be checked, which can be a reason for difference. Now, under GST, there is also a concept of state-wise registration, which is also a deemed supply part. So over there, even though under single pen, if multi-registration is there, from one GST to another GST, it is considered as supply, and we are liable to pay tax. But so obviously the counter GST can claim ITC, but tax is applicable. But when we see from the PAN point of view, because financial are prepared based on PAN point of view, then obviously this will not be recognized as an income in your financial. But however, when it comes to GST part, it is recognized as a supply and therefore GST applicable. So giving one more instance of difference between turnover and supply. Then like advance receipt, which has also been discussed in the previous session, that advances, on that we are liable to pay tax under GST. But advance specifically in relation to service, we are liable to pay tax under GST. But when it comes to the financial, advances form part of my liability. It does not form part of income until and unless I recognize an invoice against the same or recognize the income to the same. Another classic example is construction service. If we see a construction service, if you see financial, there may not be revenue from operation. It may be going 000. Because over there, people recognize the income once the sales deed is done. Or it may be percentage basis or proportionate basis. So over there, when they recognize, it may never tally with what I'm liable to pay GST. Because under GST, I would be paying tax for that construction service provided whenever I am receiving advances. But when I see my financial, over there, revenue from operation may be showing 0, or completely a different figure than on what I have paid the taxes. So basically, I just want to bring the thought process that why in 9C has been given. Because government itself recognized the fact that there can be a multiple scenario where what has been recorded or accounted in my financial as income may not match with what I have paid the tax under GST. Then, as I said, though the reason for differences, there can be also a case which may be income and books of account, but may not be supply, like proprietor rental income from immovable property. Now, we know that in housing property, there is an option to book notional rent. So, though, as per Income Tax Act, I have to offer tax, but for GST, there is no such concept, and therefore it will not form a part of supply, and therefore no GST will be applicable. Then salary income. Proprietor may have earned the salary income, that also not a taxable under GST Schedule 3 item. Now, other general reason which can be difference is discount. If you will see discount, sometimes people record discount received in the credit side of PO. Now, discount received is not a part of supplier under GST. It does not form as an income on which I am liable to pay GST. As it been shown in the credit side, I have to show it by way of other adjustment by vote. Then foreign exchange gain may be recognized as income, but it's not a supply. Profit on sale of assets recognized as income. It is not this amount, but it is the sale value which need to be considered for the purpose of discharging tax under GST. Now it's also depend on what type of property, fixed asset I am selling. If it is other than motor vehicle, that obviously sales value. But if it is a motor vehicle, then it depends whether I have claimed ITC or not. If I have claimed ITC, then it will be calculated lower of transaction value tax or ITC to be reversed. But if I have not claimed ITC, then I have been given an option to go for the margin. Margin means sales price minus depreciated value. Then we have recovery of bad debt. It may be recognized as income, but it's not taxable under GST. Penalty, damage, or forfeiture. This depends. It may be a case, it may not be taxable, but it need to be seen from point of view what type of penalty, damages, and forfeiture you have received, and based on that, it will be determined taxability under GST. The purpose of discussing all this point is to show you that what could be the multiple scenario which can be result of differences. One is the way it is accounted in the books and how tax is to be discharged under GST. Second, what can be supplied for GST may not be income for book and vice versa. Now, as I said, what can be a supply may not be income for the books is, this is where I am taking you into. If you will see, sometime it happened, people expense off, set off the expenses instead of recording it as an income. So if in case reimbursement has been claimed and tax has been discharged on the same, now reimbursement has its own, it need to be checked whether it comply with Rule 33 of your agent. If it doesn't comply, then it will form part of supply and I am liable to pay tax on it. But it can be a case those expenses, instead of recognizing as income for the purpose of financial, may be set off against the expense. But when I come to my GST turnover, I might have to add this income expense in order to drive my taxable turnover because of non-compliance of Rule 33 or because of Section 15, the valuation, it need to be added. Then another thing is what I have observed, most of the time people take care of the facts of main income, main revenue from income. But when it comes to other income, they are little lenient. They don't see whether on other income GST is payable or not, or anything to be done or not. Now, other income may not directly every time impact your supply turnover, but it may also impact your ITC. For example, if suppose you have done creditor written off. If you have done creditor written off, you have to check whether you have availed ITC on that transaction. if you have availed ITC, there can be a case of non-compliance of payment within 180 days. It may be a case, it might directly impact your turnover, but it can also be a case there it may affect your ITC. So you need to check those parts. Then the statement of PL may not have few items which is taxable under GST. One of the classic example is sale of fixed asset. So it will form part of balance sheet, though not coming in your PL, but taxable. Then comes your liability side, as we discussed, advances. So if you have received any advance against service, then you are liable to pay tax on it. And then some item which is outside the financial statement, that is what we discussed about Schedule 1, beginning supply. So even though they are not captured in your income, but may be liable to tax under GST, that is what you all need to validate before filing your GST and 9C. So now actually it's a good thing that KSCAA is organizing well advanced before 1 month, giving us the opportunity to go through, verify the financials and make sure tax has been discharged properly. Now, another thing which you need to check is what are the disclosure made in audited financial statement. Means what is the mechanism you are following for revenue recognition. Most of people now follow mercantile only, very small players follow cash system. So that also you need to check, because why I am saying it, though you might be recording your books of account on cash basis, but liability to pay under GST work on a different base, that is time of supply. Section 12 and 13 you have to see in order to see your liability to pay. Then your related party disclosure you can check from your audited financial, foreign expense and income. Then obviously we have to also give our disclosure with respect to any cases pending and status of refund application filed. This all verification is important before filing your GSTR 9C, because we have seen number of notices have been issued with respect to related party transaction and foreign expenses. So you have to verify that and make sure if any liability is payable, you have paid. And if you are not paying, maintain a proper working paper for that to ensure why you have not paid on it. It's very important if you take any decision that you are classifying any service or goods to be exempt, you should have a proper backing for it, why you are saying it to be exempted and not liable to pay the tax. This is the reason, due to what we discussed, that there can be a multiple scenario where audited financial statement, the income shown in audited financial may not match with what has been paid in GST. And due to this only, table 5 provide for calculation of GST turnover. And if you will see, it covers 14 types of adjustment, out of which 13 are specific and last one is the residual, where you can't be qualified in all the 13, you have to write in 14. Now, you may say that all this table as of now is optional. You have been given an option to show all under 5.0 instead of reporting under specific field. But I will advise to report under the fields which has been given. Why? Because number of cases has come. Now we are standing in 24 and 17, 18, 18, 19, 19, 20. I believe most of us has received notice for something or other. And the notices which we have received, if I say you, I have find out it is not more on legal, but it is more on reporting issue, reporting errors, which the people have done in the past, due to which notices has been issued. Reporting of ITC under wrong head, reporting net ITC, turnover exempted by mistake disclosed in taxable. Then people, as it is optional, they show 5.0 figure very high. Due to being such a high figure, we get notices to explain why such a high figure has been reported in 5.0. But if we do in respective field reporting, it reduces our cost of litigation also. Because over there, people department, when viewing your 9C, they will also come to know why you are making those adjustments. Just for example, if is a case of unbilled revenue, I report at the beginning and at the end of financial year, they will come to know why I have done the adjustment instead of reporting in FIFO. So it's better to report in specific table field which is given instead of opting for optional and reporting in FIFO. Now, opting for optional and reporting in FIFO should be done where you want to be more precaution, where you feel it may result into other issue. But wherever pictures are clear, wherever you know what it is, it's better to report in the respective tables. So, how we drive our GST turnover? For that, we need to make sure we do our working very properly. And to do our working properly, we need multi-dimensional GST report. Now, when I am discussing about this reconciliation, I am not keeping it limited to 9C, but even for 9 also, before filing, you should make sure you do this reconciliation. Now, if you will notice, when it comes to GSTR 9, it is more of type-wise, document-wise, where I have to give my details. But when it comes to 9C, it is a total reporting, and over there only rate-wise is the detail required. But it is advised that you do all type of report which is required need to be done. So as in 9, I have to report type-wise, means supply type-wise, I'm saying taxable, zero rated, exempted. Then document type-wise, means invoice, debit note, credit note. Then third, your rate-wise, 5%, 12%, whatever the rate applicable. Then you can also do party-wise, B2B or B2C. So party-wise repo will have no impact in 9C because it doesn't matter if it's B2B or B2C. Focus is whether tax has been paid. But when we come for 9, over there is a specific description to be disclosed in B2B or B2C. And there is a reason. Because when we say B2B, there is a transfer of ITC. But when we say B2C, there is no transfer, outflow of ITC is happening. So you need to be careful at that. Then we should also check our tax type. Basically, based on place of supply, we should check what should be the tax type. IGST, sorry, IGST, CGST, LGST. So all this type of reconciliation is important before filing 9 and 9C. Now, in case if you have a multi-GSTN registration, then you also need to ensure that you do your repo GSTN wise. Because when filing 9C, as we know, it's a state-wise GSTN, and every state will be having a turnover. That turnover, when added, should match with financial statement. And I need to upload a turnover certificate or a TB, GSTN wise, with the 9C. So this repo is also important to need to be done for the purpose of filing 990C. Just 1 minute. Now, as we were discussing various type of reconciliation which need to be done for turnover, same is also need to be done for the rate wise. We have to identify what we are dealing into goods or service, what is the classification applicable, and what is the rate of tax applicable. This is just a sample working for the members just to check what type of working they should do before doing 990C. As we are standing over here and will be doing 7 times 990, I know most of you will be doing all this thing and taking care of it. Now, these are additional repo. It's upon you whether you want to do or not before filing 990. Is a reconciliation with Form 26 Because if it's a service industry, in Form 26 TDS deduction will be coming. If it's a good industry, TCS will be there. but it's not that 100% applicable. So can we check based on AS whether it has been properly done or not? What has been shown, recognized, TDS deducted under Form 26 AS has been offered for tax. That one repo can be done because we know that notices have start issuing based on Form 26 AS. There is a different fight that whether Form 26 AS can be based or not. I'm not talking about that, but as a precaution, it can be taken before filing 9C to check whether any difference is there, what has been accounted in books, what is there in Form 26 AS, and what is offered for GST. Any or most of the people here would be doing, before doing audit, finalizing books would be taking care of Form 26 AS, but that will be based on books of account. If you can do, you can also do it from GST point of view. Then another is your e-way bill reconciliation and e-invoice reconciliation. But those are not from the point of view of 9C. They are more point of view to keep it ready to ensure anything missed out or not. Because as I said, we are standing in the 8th year and people are now more accustomed what is happening, how it's to be done. But this repo can be done to check once if anything has been missed out. Now, turnover part, we finalize. We discuss what could be the multiple reason for differences and how I need to drive my taxable turnover from audited financials. We will come down to GST turnover, then removing the turnover on which tax is not payable will come down to taxable turnover, and on that, based on classification, we will apply the rate of tax and we will get our tax payable, gross tax liability. Now coming to the part of input tax credit. Now, as I said, input tax credit for the purpose of GST means eligible input tax credit. Now, how I will determine the credit which is I claimed reported in 3B is an eligible ITC amount. If I see 9C, the table 12 is more focus of repo with books, but table 14 is with the expenditure wise. So over there, we need to be careful which expenditure we choose to report, is it eligible or not. Therefore, it is advised to do eligibility check before filing a 9C. So how you can do it? So first you have to check what are the expenses you are having, and in those expenses which are GST suffer and which are without GST. Now, which are GST suffer, that will be further subdivided into two, eligible ITC and ineligible ITC. Now, ITC which is ineligible, you have to expense off in your books, and eligible ITC, you have to make sure you have claimed that only in 3B. Now, the expenses without GST, you have to check RC. There may be a case if GST is not applicable either on those items or it is an exempted item. But it is other than those, you have to check whether RCM is applicable on the same or not, and you have to discharge your liability. Now, when I come to RCM part, if you will see in 9C, there is no much of disclosure relating to RCM. It is only table 9 where I have to disclose rate wise what is the RCM liability I am liable to pay or paid. And table 14, from there, an officer can get idea if any RCM related expense is there or not. Now, as I discussed, we have to do our expense analysis. Now, while doing expense analysis, as eligible ITC will depend whether I am eligible to claim or not based on the use of ITC. So if it is in relation to taxable and zero rated, I am eligible to avail. But if it is in relation to non-taxable exempt nil rated, ITC is not available. So we have to verify based on the use whether it falls under eligible ITC or not. This is the first check which need to be done. Apart from that, there are other checks which is prescribed in 16 and 17 which need to be done before claiming. That transaction should be reflecting into the, you should have the possession of invoice, goods and service received, supplier would have paid the taxes. Those compliances also need to be taken, and plus 17.5 block credit. That the ITC which you are claiming does not fall under the block credit, because it may be a case even if used for business but not eligible. Then, like In previous session also it was discussed about Rule 42 and 43. If a person is engaged in taxable and exempt both, at the year end, SSC is required to do recalculation yearly to check that they have reversed to the extent of exempt supply based on Rule 42 and 43. If they have excess reverse, then they can claim. If they have short reverse, they have to pay. Now the expenses which are with GST, those will be reflecting in GSTR 2. Now we are moving toward how the things to be reported in table 12 of GSTR 9. Now the expenses which are there in GST 2B, with GST will be reflecting in GSTR 2B. Now credit which are matching and those appearing in portal is not an issue. No action to be taken. But credit which is only in books, not in portal, then you have to check what went wrong. Now if you will see, we have last day to claim ITC, which is also 30th November, or due date of filing annual return, 31%. Now, as we all will be filing, we have start preparing, but not filing because some people may be doing some adjustment in the October month and waiting for those adjustment to be done. And it is important to wait if you want to do some adjustment, because I said it is earlier of the following. So October return or your annual return. So if you file your annual return, over there only it got pause. You can't do correction in your October month return if you file without correcting. So if any correction need to be done, you can do now. As of now, only 3B due dates are going on. So 3B related changes, if anything, you can incorporate and do it. And after correcting only, you file your annual return. So coming back to it, if you have anything credit appearing only in books, but not in portal, then if still not reflecting till 20th December, then it's a credit lapse. Nothing can be done. So what is there in books, still not reflected before 30th November, ITC will get lapse and you have to expense it off. Because one of the condition to claim is it should be reflected in 2B. And anyhow, now filing of GSTR 3B has been based on 2B. So you can't add anything more than 2B apart from previous year ITC not claimed, but that was also reflecting in the earlier 2B. Then there can also be a scenario where it is in portal but not in books. Now, it's a very less chance now because while finalizing your books, you would have taken care of it. And the only circumstance which can is either that person whose transaction is reflecting in 2B may not have provided you the service of good, that's why you have not accounted. Or it may also be a case, instead of accounting your the ITC first and reversing, you may have expense off to PL directly. So that could be the scenario where it could be a reason for only in portal and not in books. Now, only in portal, not in books, it means you are yourself is not claiming that ITC. So it will not form part of your table 12 also while doing the reconciliation. Now, in this regard, it is important to understand the credit flow which happened. Why I am discussing it is to build the base for 9C. Now, if we see our GSTR 9, over there, we somehow have a clear picture how the credit is flowing. We are able to see from 4A5, it is going to 6B. 4A3, I have to report in 6C or D, means register and register. 4A1, import of goods, I need to report in 6E. 4A2, 6F. 4A4, ISD credit, I have to report in ISD. So their corresponding columns in 3B have a corresponding rows in GSTR 9 to report. But when we come to table 12, there is nothing called this bifurcation. It is the total ITC which we need to report. So there is no differentiation I have to do. What is my in relation to import of goods, import of service? All total ITC I have to report in table 12A, which will basically more based on books. Now, second part, if we see GSTR 9, I have separate columns to report about the avail and reverse. Table 6 is to avail, table 7 for reversal. But when I comes to GSTR 9C, I have to report net of it in all the rows A, B, C. It will be net of reversal which need to be reported. Now, second part is in GSTR 9, I have been given a separate columns to report about the ITC relating to current year, claim in subsequent year, and ITC reversal relating to current year reported in a subsequent year. Similarly, I also have the table to report such carry forward related impact in table 12C of GSTR 9C. So if I summarize why I given all this thing is to summarize my base for table 12 of 9C. So my table 12A, which will be total ITC as per books. Now my total ITC as per books will be having two breakup. One will be what is reflecting in 2B and one will be not reflecting in 2B. The one which is not reflecting in 2B until November. When I am saying reflecting in 2B, I am focusing it till November because till November I am allowed to claim the ITC. So I have to check if it is still November not reflecting in 2B, those ITC will get lapsed. So it will form part of unreconciled ITC if I have not reversed in books in 23-24, but that I will do in 24-25 will be coming in as unreconciled ITC and will be shown as loss. Now, one which is reflecting in 2B. Now, the one which is reflecting in 2B, there can be two scenarios. One which I have availed in the current year. In 23-24, I have availed. No issue. It's already forming part of table A. Nothing is to do. One will be temporary reversal. As we know, from August 22, 3B reporting pattern has got changed. And we have to report ITC, which we are going to reclaim in the subsequent period. So those temporary reversal, which is you have shown by way of 4V2, and you are going to claim in the subsequent year, will form part of your table 12C. Because you are carry forwarding that ITC to table next year. So that's why it will be reported in table 12C. Now the ITC 12A we did, which is the total ITC as per books, 12C we did, which is reflecting into the claim in next year. Now coming to the part of 12B, brought forward ITC. Now, as I said, from August 22, it is based on GSTR 2B. So even previous year ITC, which I am going to claim, are the ITC which is reflecting in 2B, may be reflecting in current year. It may be a case of last year temporary reversal. So those you will report in table 12B, which you are claiming in current year relating to previous year. But if you will see the overall picture, it is based on GSTR 2B. 12A, though I am writing total ITC, which is as per books, but my 12B and C are based on GSTR 2B reflecting. Because I can claim ITC only when it is reflecting in 2B, apart from other compliances. If it is not reflecting in 2B till now, then it will got your unreconciled ITC and you have to lapse. With this one more point that if you see in GSTR 9, we have table A, table 12 and table 13. So we have table 12 and 13, which is impact carry forward of ITC in subsequent year, which will form part of table 12C because it is based on GSTR 2B. Now coming to table 8C. Now I saw in the previous session also because people were having doubts about the negative. Because 8A, though auto-populated based on 2B, is much lesser than what is getting auto-populated by way of table 6B plus 6H in table 8B. There is a reason. Now, as we are aware, reporting pattern got changed. So what is happening is when we reclaim the ITC, then first time what is happening? 4A5 I shown 4V2 temporary reversal. Due to any reason, goods not received, invoice not received, what may be. I might have parked my ITC, suppose in the month of April. Now in the month of May, compliance has been made. So what I am doing? I am adding it back to 4A5. I am showing it as a 4D1 because I am claiming in the next month of the previous month. Now, when I am reporting in our GSTR 9, what is happening? My table 6B, I am reporting what is my all other ITC, which is my table 4A total. But over here, you have to keep in mind that ITC which you are reclaiming by way of 4D1, you have to report in table 6H. That reclaim ITC, you need to report in table 6H. Even though you report in table 6H, you will get difference in table 8. So 6A will be lower than your, 8A will be lower than 6B, giving you negative impact. This is happening due to this 4D1 reporting, means I have to add back 4A5. But what you can do, though the difference is coming, if that difference match with table 6H, you are having a corresponding answer why it got negative because of reclaim. And we are also facing this issue when we are doing, and as of now, there is nothing from the government side that how this 4D1 previous year ITC reclaim to be tackled. But the only thing you can make sure that difference, if coming, that it match with 6H. If there are differences more than 6H, then you have to obviously reconcile to see what went wrong. Now, why I say this is over here, I can't rely on table 8C because it can be case while adjusting something, it may not match with my table 12C of GSTR 9C. But I can rely on table 13 and table 12 of GSTR 9 to match with table 12C of GSTR 9C. So that is the check you can do. This is basically a check to check whether the ITC as per book should be equivalent to 7J of GSTR 9. That is the net ITC I'm showing as available for utilization. Plus any this year adjustment which I have done in the next year. ITC available but avail in next year should be added. Any reversal in the next year should be reduced, should be equivalent to my ITC as per books. This check you can do to make sure what you are reporting in table 12 is correct. This is a small practical issue and some scenarios we have I have taken just for discussion purpose. Now there can be a case where you have excess avail in 3. Then as I discussed while starting the discussion that GSTR 9 is statement of fact. Over there you have to report what you have done and you will not correct over there. So if you have excess avail, report accordingly based on your GSTR 3B. And in 9C at table 12, you can get the unreconciled ITC and you can pay it through DRC03 and report there. It can also be a case that you might have avail ineligible credit. Then also you have to report in your GSTR 9. This impacts will be taken through 9C. But it's a choice upon you. If you want, you can correct it through GSTR 9 also. You can show the reversal over there and pay through DRC03. But as GSTR 9 is based on 1 and 3B, so it's better to correct it in 9C. Then there can also be a case where you have excess avail and you have reversed in 23-20. If same year you take it, same year you reverse, nothing is to be done. Because in GSTR 9, nil impact, and for 9C also it's a nil impact. Then there can be a case where you have short avail in 23-24, balance you avail in 24-25. The ITC which you have avail is coming in 6B and 6H of GSTR 9. And total ITC balance will be coming in table 12A of GSTR 9C. And the balance if you are claiming in 24-25, it will be reported in 8C and table 13 of GSTR 9 and table 12C of GSTR 9C. Then there can be also a case that you may not have availed the ITC. If you didn't avail, then it got lapsed. It will form part of table 12F or 8E. Input tax credit reverse. Now, ineligible credit not reverse, as I said, it's upon you, but it is advisable to do through 9C. So you can reverse over there and pay it through DRC03. If you have reversed in next year, then obviously it will come in table 12 of GSTR 9. but not in table 7, because table 7 deals with current period reversal, because what is reported in 3B, there will be mismatch between table 7 and what has been reported in table 4B in GSTR 3B. If you have not reversed, then do not report in R9. While doing 9C, you can take impact of it and do the changes which need to be. Now we have discussed about turnover finalization, about ITC finalization. Now coming to the part of RCM. Now, as for RCM, I said there is no specific reconciliation mechanism has been provided. Neither in 9 and 9C, it is more of reporting. But the mechanism which is followed is we rely based on GSTR 2B. To check whether for department GSTR 2B is the best way to see whether any RCM liability is there is paid or not. So, and when we come to 9C, it is rate-wise reconciliation table 9, where we give the detail, and RCM ITC, it's form part of table 12 only. Means, as I said, in table 12, there is no bifurcation like GSTR 9, table-wise. In 6B, you have to report this 6A. There is no such bifurcation. Total need to be reported. Accordingly, RCM ITC also in totality need to be reported in table 12, irrespective of part. It is from registered or unregistered. But as you can see in 9, there are specific rows to report when it is received from registered or unregistered. And when it comes to taxable supply on which tax is payable under RCM, then tracking need to be done through table 4G. Over there, like it was discussed in previous session, that inward supply liable to RCM need to be disclosed over there. You need to check whether the rate-wise detail which you have given of RCM total match with that or not. But this RCM checking, you can do the way we have discussed about ITC. Now, while discussing ITC, you would have noticed I have said about the fact of without GST. So you can check where the expenses are there without GST. Any of the expense fall under RCM or not. Now, these are the validation check based on GSTR 9. So how you can check your 9C and 9 are in correlation with each other. So first part of GSTR 9C is my GST turnover. So how I can check my GST turnover matches with GSTR 9 is to make sure what is the turnover coming in table 5 and 4 plus any reporting which is done in table 10, that is upward amendment if anything I have done, less any downward amendment which I have done in subsequent year, table 11. Then 5n plus table 10 minus 11 will give me the table 5 GST turnover of 9. So that check you can do. Anyhow, that check is already been taken care in GSTR 9C form. Now taxable turnover. Now similarly, like we discussed about table 5, over here, then when you see table 4n, it deals with the taxable turnover in GSTR 9. So table 4 and taxable turnover, then again over there in table 4, I also have inward supply liable to pay under RCM, because table 4 of GSTR 9 deals with tax paid and it also includes inward supply under RCM. So that need to be reduced because over here we are talking about turnover comparison. So table 4N minus inward supply under RCM plus again any downward or upward impact if we have done in the next year, that impact, after taking that impact, we have to make sure it matches with table 7 of GS, taxable turnover of 9. Tax payable. Now we discussed that table 9 of 9C, where we have to give rate-wise detail. Over there, we get our tax payable. That you need to correspondingly check with table 9 of GSTR 9. Over there, total value on which I am liable to pay tax is come and what tax I have paid will also come. Then taking the impact of table 10 and 11. 9C. Now coming to the part of input tax validation. What we discussed, it was the outward validation plus tax payable and paid validation. Now coming to the part of ITC validation with 9 and 9C. So if we saw GSTR 9, we know we write about ITC claim in table 6 reversal in table 7. So I have to take net impact of reversal, avail minus reversal is what I will get net ITC avail, that I have to match with my table 12. Now in my table 12D, which also carry the impact of table 12 and 13 of GSTR, means this year ITC impact taken in the next year. So taking those impact, I have to make sure my ITC, which I have reported in table 12 of 9C match. If there is any unreconciled ITC, then we have to find out the reason why it can be. If unreconciled ITC difference in positive, it means your books is higher than what you have claimed. And there could be a reason that either those ITC has been lapsed or ineligible ITC you have not reversed in your books, due to which it is higher. If it is lower, if it is in negative unreconciled ITC, then the reason can be either you have excess avail the ITC or you have not properly accounted in the books. So accordingly, action need to be taken. Now this is table 14 of GSTR 9 expense wise reconciliation. As we discussed, we have to check with payment and without payment. If it is a with payment, you have to check it's a forward or RCM. All reporting will be done in table 14. If it is a without payment, reason can be either it is exempt, non-taxable, or it is received from a composition person, then non-taxable, and all the data, table 14 consists of all the expenses irrespective of the fact whether it is with GST or without GST. Once it is basically to say you basically statement of profit and loss account, the expenses which we record over there, we track it overall in table 14, and after that we write the total ITC which is available, which is there recorded in the books, and then we write the eligible ITC, because it not be a case the total ITC which is there, I may not have claimed 100%, because I have to verify for eligible ITC. That's why table 14 did first give the expense description, expense amount, total ITC, and then the eligible ITC. So overall expense related ITC reconciliation need to be furnished there. Though table 14 is optional, but even if you don't want to furnish, you should do this report to identify if any ineligible ITC might have claimed, or if any expense liable to us RCM should not have missed. With this, we have come to end of our session. So, if anybody have any questions, Sachin ji or Rahul ji.
Thank you, Ashika. Thank you for the session. We have few queries. Can we take it forward?
Yeah.
This is from CA Vishnu. Can you give a practical example of how table 6 and D and 8 are being filled this year, as 8A has been changed to based on 2B and not 2A, which has resulted in huge variation in method of reconciliation. As data in 2A contains relevant financial year, which was simpler to reconcile than GSTR 2B, which only contains ITC uploaded during the relevant financial year, which contains 22-23 uploaded in 23-24, but ignores 23-24 uploaded in 24-25, resulting in 80 differences. For such ITC uploaded in next year, if we are showing the same in table 8C.
Okay, fine. So let me take you through GSTR 9, 1 minute. I hope GSTR 9 is visible.
Visible.
Okay. So I will limit this on the ground that this difference has arisen due to the fact of table 4D1. So if you can see, we have table 6. So here you will report as per your 4A file, but the 4D1 ITC you will reduce from 6B, and you will report in 6H. Because it is becoming double counting due to reporting changes prescribed for 3. So 4D1 ITC which you have reclaimed will be reported in 6H. Now, as you rightly pointed out, there is a huge difference arising in table 8 due to this reporting pattern change. Now, as of now, from government side, there is nothing has been clarified. 8A has been auto-populated based on 2B. ITC over here coming based on 6B and 6H. So even 4D1 impact is also there. But what you can do is, the difference which is coming, if it is matching with my 6H, it is straightforward showing why the difference is coming is due to 2 times reporting of same ITC in 4A5 due to reporting pattern change. So that you can keep a record of it.
Another question is about the tables which are optional. What are the tables?
All tables are optional. So I will take you through 9C. So if you see, I'm just, as 9C is the session, so I'm assuming for me it's for 9C. So if you will see over here, from table 5B to 5N, this all are optional. This all adjustment from 5B to 5N is optional. You can, for all this thing, you can directly report in 5O if any adjustment to be done for turnover. Now coming to over there, 7, there is nothing called optional. You have to report respectively because you have to arrive at taxable turnover, which is specifically linked to your GSTR 9 also. Over there only you will get exempt non-GST, 0 rate is supplied, and supply on this recipient is filed. Apart from this, only table 14 is optional. So in table 5 we have optional, and table 14 only we have optional. All other tables need to be filled in GSTR 9C.
We have another question also related to GSTR 9. Can we take up right now?
GSTR 9, okay.
Should we not show in 8C of GSTR 9, ITC of 22-23 availed in 23-24?
Should we not? Now we will report in table 8C. It's not the case we will not report, but not ITC in books. It is based on GSTR 2B. If your 23-24 ITC, which you have not claimed and duly reflecting in 2B of 23-24 or reflecting in 24-25 till the time limit, that needs to be reported in 8C. But which is reflecting in 2B, not the one which is not reflecting in 2B, nothing can be done. If it is not reflected to 30th November, it got lapsed. You can't carry forward.
Yeah, I think the queries are limited. So thank you so much everyone for joining for this session. Thank you, Ashika, for this wonderful session. Your explanation about the turnover and the supply, everything was very useful for GSTR 9C. Thank you so much, Ashika, for your time for this session. Thank you everyone for joining for this session, and thank you CA Vijay Kumar Patel, President of KSCAA, for helping us in organizing this session, and all the committee members of IDT committee. Thank you so much.
Thank you. Thank you for giving words.